Good morning, everyone, and thank you for joining us for today's meeting, Audit Committee meeting of October 16, 2023. Please note for the record, committee member Anita Kawatra is participating virtually in a listening capacity only, and Dr. Michelle Allen will be representing Dr. Katz in a voting capacity. I'd like to propose a motion to adopt the minutes of the Audit Committee meeting held on June 5th, 2023.
So moved.
Okay, I'll take the votes of the members one at a time. Dr. Pagan,
Yes.
Dr. Allen,
Yes.
Frida Wang is not here.
She's not here yet.
She's coming? Okay. So are they adopted then? Okay, the minutes are now adopted. I will now propose a motion to convene an executive session to discuss confidential and privileged matters that may be related to threatened and potential litigation. If you'll excuse us, we're going into the other room. I should take this. Yep. Thank you all for so patiently waiting. We are not back in open session. We're going to have a presentation of the fiscal year 2023 draft financial statement by David Guzman.
Good morning. So today we will be presenting the FY23 financial statements for the Health and Hospitals Corporation. Before we present the financial statements to the audit committee, I want to take the time out to thank members of the Controller's Office team who worked tirelessly during this year-end audit period to get the financial statements to the point that they are in today for our presentation. Special thanks to Joe, James, Nicole, and Timmy, some of which are not here today, but they're here in spirit. And our colleagues, Grant Thornton, Tammy, and Steven, and their team. It was remarkable. I was, part of the audit cycle this year in its entirety. And it was amazing to see the collaboration that worked between the teams, making sure that our financial statements meet GASB and GAAP standards. It's truly an honor, again, to have worked with you all on this. The financial statements consist of the statement of net position, aka the balance sheet, statement of revenues, expenses, and changes in net position, aka the income statement, statement of cash flows, and the note to the financial statements. Also the MD&A analysis, I plan to cover that here with you today, but with a focus on the income statement that's on page 17. So I'll type it through now.
Okay, I'm sorry, David.
You have another chair, do?
Okay, my vision's not so good these days. Okay, so you'll note on the income statement that we're showing a total operating revenue of 13.96 billion and a total operating expense of 13.92 billion, which leaves a small operating gain of 39.6 million. The numbers I'm speaking to are on the consolidated view and not just the H&H view, so I just want to make sure that that's clear. Controlling for capital contributions, there was an improvement in net position of 565 million on the bottom line. Some key trends and drivers of H&H's financial performance. I'll start with the revenue side. So as I stated before, we finished with 13.96 billion, which is actually a decrease of 950 million from prior year. While there is a decrease, there was some increases noted. So I'll start kind of with some of the increases, but they were offset by decreases in other areas. So I'll start with net patient service revenue of 6.98 billion, increased by 124 million. Metro's revenue increased by 324 million, mainly due to an increase in DishMax revenue of 267 million. Risk pool revenue increased by 138 million. Professional billing revenue increased by 25 million. Offsetting those gains were inpatient revenue decreases of 169 million, outpatient revenue decreases of 16.2 million, and T2 revenue decreases of 131 million. A lot of that was driven by reductions in COVID-related revenue. Appropriations from the City of New York of 1.6 billion increased by 681 million. 470 million of tax levy revenue appropriated for humanitarian emergency relief and recovery centers, also known as HERC. Collective bargaining, there was an increase of 142 million from DC related to DC 37 settlements, and subsidies of 73 million. All went into the appropriations performance.
David, could I,
Yes.
what's the eliminations column? Could you explain that?
Yeah, so you have HHC and we have Metro Plus, so there's related transactions between the two. So what might be revenue to Metro Plus may be an expense to us or vice versa, so we actually have to eliminate those transactions when you're looking at it holistically, the two consolidated.
Great, thank you.
Premium revenue finished at 4.7 billion, which is an increase of 443 million. That was driven by membership growth and safety net hospital funding and FDHA funding. Grants revenue of 502 million decreased by 1.7 billion. The majority of that was 994 million decrease in test and trace or test and treat. FEMA and CARES ARPA grant revenue decreased by 452 million. BBP QUIP revenue decreased by 102 million. So all those factors contributed to the reduction in grants revenue that we're noting. Other revenue of 214 million decreased by 58 million. That was driven by 22 million decrease in 340B revenue, 6 million decrease in St. George's revenue, 7.4 million ACO revenue, and the timing of many of the miscellaneous receipts. Any questions so far on the revenue side that I've covered?
You mentioned the DC 37 agreement. Did that include the nurses increase?
No, it does not include neither. I believe that happened this year, if I'm not mistaken, right?
Next
This
year's,
is 24, this is 23. which
next
ended in
year.
June.
Thank you.
Okay, so turning to the expense side, so we finished the year 13.9 billion in expenses, operating expenses. That's an increase of 177 million from prior year. Some driving factors: PS expense of 3.5 billion increase by 144.5 million due to collective bargaining and increases in FTEs on the H&H payroll. OTPS of 6.7 billion decreased by 1.3 billion due to the reductions in COVID and T2 OTPS. However, it was offset by 408 million increase in HERC OTPS and 54.5 million increase in non-COVID temp staffing and 104 million in pharmaceutical spend. The pharmaceutical spend piece, I actually spoke to Danielle about it, and it's really, we're just recognizing price increases from transitions in 340B. So it's, it seems to be more of a pricing thing than anything. So I just wanted to throw that out there. Fringe benefits of 1.1 billion increased by 83 million, mainly due to 76.3 million increase in health benefits. Pension of 390 million increased by 139 million based on NYC Actuary's report, mostly due to a decrease in projected earnings on pension plan investments. OPEB of 48.5 million increased by 20 million due to a change in a discount rate. Affiliation expense of 1.58 billion increased by 103.7 million, Depreciation increased by depreciation expense of 570 million increased by 68 million, mostly due to EITS assignments and the implementation of GASB standards for lease accounting. Any questions on the expense side?
No, I guess this is going back to revenue. When do we recognize funding from the city for HERC? At what point?
So this year, I think we actually changed the way we actually recognize some of that funding because it's more controlled in terms of, and more kind of discrete in terms of the subsidies from the city. We're actually recognizing when we incur the expenses.
Expenses.
Right.
Okay.
And because now, it's a budgeted item in the city, they know they owe us the money and we have
Right.
proper support. So, that's something that we did differently this year in terms of how we are looking at appropriations from the city.
Okay. Are there any other? Oh, go ahead.
Sorry, that's different from how the T2 funding was, or same?
I think it's pretty much the same. Well, Joe, he's the spirit behind a lot of these numbers, so he could jump in here.
It's very similar. Once the expenses are incurred, our HERC team will send it over to OMB and seek approval for those expenses. And they will subsequently provide drawdowns to the city, and the city will send us the funds.
Okay. So not to belabor it. So we incurred the expense. The city's going to let us draw down the funds. The time period in between, you recognize it when you incur the expenses. Suppose you don't get the funds till later. Same process followed.
Correct. So we will incur the expenses, and we will accrue or recognize the revenue, and the cash will come in later.
Okay. Thank you very much. Are there any other questions? Okay, thank you so much, David.
I just have a few more items to cover.
Oh,
if you don't
sorry.
mind. The cash flow, there's also a statement of cash flow. I just want to mention, cash ended at 807 million, which is up 58.3 million from prior year. Also, the balance sheet, there was a matter we wanted to mention here, which we had to do a gross up of our balance sheet to recognize a new GASB standard associated with leases. So the gross up was about 400 million. Just wanted to mention that to the committee as well.
David, there's these financial ratios here. Can you explain what the current ratio is?
Okay, which page?
Oh, sorry.
Sorry, don't get to see.
It's on the, it's in the financial report too.
Hold on.
It's on the summary page that you have here, page 2.
Two. Toggle backwards.
And it's in the financial statements, it's on page 7.
Okay.
Try playing with it.
I will do it in paper form.
David, I have it on the bottom of the page 3 or a little.
That's on that. It's on page 7 over here. Once you guys go to that, we're doing the quick document.
Here comes David to fix the IT issue.
Let's see here.
There it is.
Ah, there you go. Okay. Okay. Yeah. So the current ratio is a measure of our current assets divided by current liabilities. So it really speaks to liquidity and our ability to pay bills.
So the improving is a good thing.
Yes.
I mean, that it's getting larger. The number getting larger is good. Yeah. And same with days cash on hand also. It's a little better.
Right. Correct.
Thank you.
Did we go do all of our leases in terms of how they now have to be recognized?
Yeah, so in the past, we would recognize leases as more like an expense item,
Right.
but with the new GASB, we had to actually make them assets essentially.
Right.
So that's why they affected the balance sheet. Because if you think about it, we have the use of those assets, the exclusive use of those, whatever it is we're leasing. So it's basically an asset, and that's how we were by our GASB pronouncement told to recognize them in financial statements.
Right. So all of our leases are captured now.
Well, the ones that qualify under that GASB pronouncement to be captured, there's certain criteria that has to be met for us to book them as an asset. So not all leases are in there. We still have some that are actually expense.
Actually, I just it's occurred to me maybe because of Sally's question on the HERC. So if you could go to page 48 of the financial statements, it's the notes. The due to from the City of New York. There's a negative, which means I guess amounts due from the city, appropriations from the City of New York in fiscal 23.
Correct.
Is that something that we see? I noticed that in 2022 there isn't, and the appropriations, is that maybe due to the timing of, say, the HERC and
Yes.
transfers?
Yes.
It's a combination of HERC, some collective bargaining accruals that we have set up from the city, and also, mostly collective bargaining and HERC.
Okay, because normally we don't see such a large due from,
That's
right?
exactly
The
it,
city,
yeah.
Okay.
Yeah, it's usually due to the city.
What's that?
It's usually due to the city.
Right, yeah, okay. That's what I thought. I mean, thank you. Thank you.
Are there any other questions? Okay, hearing none. Let me see what I have to do now. We don't have to adopt the financial statements. Poll, I did that already. Okay. Next on the agenda will be the presentation of the Glenn Thornton fiscal year 2023 report. I think Brian?
Okay, thank you. The slides are up now in order. Okay, so good morning, everybody. We'll try keeping our remarks high level, try to get you back on your schedule here. I'm Tammy Rudinsky. I think I know everyone by now. I've been the audit partner on this account for since 2018, and with me today, you should recognize some familiar faces. I have Steve Diaguardi, our senior manager, and Brian and Albert, who will represent the Metro Plus team. So really, I want to really echo exactly what David said. Really, thank you to John and David and James and Joseph and Nicole and the entire team, those who are here and not here today, just representing the finance function. It's really been a collaborative approach, fully transparent throughout the audit process and full cooperation, and we'll get into that a little bit later on. So really, thank you for a great relationship, and to Sally for leading the team from an audit committee perspective. So this is our required presentation. Feel free to stop us throughout if you have any questions. So turning to the next slide, we met with you several months ago and presented our audit plan. So we're here today to present the results of the 2023 audit process. Our plan as we presented is what we executed on. These are the deliverables that we discussed and the various financial statements that we audit and will present today. The New York City Health and Hospitals for the fiscal year end June 30th, 2023. As you can see, there's various other financial statements, both June 30th and December 31st year ends, which we will not be reporting on today, as well as some of the other auxiliary certifications and attestation reports. So this slide lists the responsibilities to perform an audit under GAS using the government auditing standards and express an opinion, and we'll get to that later on today. We plan on issuing an unmodified opinion. I think that's important to just state up front. So full cooperation throughout the entire audit process.
Just one
next-
second, Tammy, Frida, you had a question?
It was just on the financial statements
Correct.
for Metro Plus.
Mhm.
Is the June 30 and a December 31?
Yep.
Is that, do you audit twice, or how does that
Do,
work?
we do for Metro Plus. The 1231 financial statement audit is on a statutory basis.
Okay.
And to support Tammy and Stephen's audit, we audit Metro Plus as of 6/30 on a GAAP basis.
Is there a separate standalone statement for Metro Plus for June 30, or only the December 31?
Just 12/30.
Just 12/31. So they do certain procedures to get us to the opinion that we need for our financial statement purposes
Right.
as of June 30th. And it's the same team, so full continuity. And Brian and Albert, Albert's the actuary, have been on this account since also for many, many years. So, but they do both audits. So, but different reporting requirements and different year ends.
Okay.
A little confusing, but
Yeah, that's confusing.
Okay, this slide lists the responsibilities of those charged with governance, the committee today, to oversee the financial statement reporting process, setting a positive tone at the top, sharing any significant matters as it relates to internal controls, and informing us if you are aware of any fraud or suspected fraud. So I usually like to pause at this part in the meeting. I know there's a whole slide on fraud on the next slide, but is the committee aware of anything that should be reported to us today? Okay, great. And on the right here is the responsibilities of management. So David and John and the team to present with us and prepare the financial statements, design, implement internal control. We'll talk about any control findings as it's relevant to the committee, informing us about fraud, subsequent events, and then a written representation letter that will be signed with management prior to us issuing the financial statements in a couple of days. I'm going to skip over the next slide. We just talked about this. These are just high level as we issued or prepared this presentation. There's a couple things that we're wrapping up, not unusual for this state in the audit. Will be done in the next day or so. My team is actually in the field finishing up some of this now, but there's always just a couple lingering items that are typical at this point in the audit process in order to issue the financial statements. Over to Steve. We'll walk through high level the areas of audit focus, and then Metro Plus will walk through their items of focus.
Great, thank you, Tammy. So over the course of the next couple of slides, I'm going to be focusing on the areas where we as auditors spend the most amount of time. And the reason we spend the most amount of time is because they're the areas of highest risk to the organization and to the organization's financial statements. First item I'd like to touch on this slide is your accounts receivables and patient revenue audit areas. And as part of our audit procedures, we really focus on what is management doing around some of the estimation processes that back the allowances against the receivables and revenues, and also validate existence of the receivables and revenues. So, did the patient actually come through the door? Were the charges correct? And things of that nature. And then was it ultimately recorded and reported properly within the financial statements? Some of the things that we do to gain comfort over these key audit areas are, first looking at analytical procedures. We look at, from a high level, we start looking at days in accounts receivable, review write-offs, and aging of balances over time. And that really gives us some insight as to what's happening with the balances over time and helps us understand some of the trends and really where to focus our attention. As I mentioned, we spend a considerable amount of time reviewing management's methodology for estimating any types of allowances, with a particular focus on the underlying assumptions. And a lot of the assumptions are typically based on historical trends, but then also factoring in other environmental factors. So if there's changes in any type of collection efforts or things from a regulatory basis that might have an impact, and we take all that into consideration in our testing of the underlying assumptions and the allowances. As I mentioned, we review for existence, right? We want to make sure the patients that are ultimately generating revenue and receivables, that the services were provided and there's a level of existence that we can test. We do this by looking at the medical records, billing that is associated with those patients, and then ultimately filtering all the way through to the recording and reporting of those revenues and receivables. Last item I want to touch on is the cash analysis that we do on the revenues and receivables. Over revenue, we do a cash to revenue proof. So ultimately what we're doing is we're taking the revenue that's on your income statement and comparing that to the cash that actually came in throughout the year. And we're substantiating the revenue by actual physical cash and reviewing the cash. And we test the underlying data through a series of procedures to ensure that the cash is in existence. Moving on to the next slide. Another area of focus as it relates to key estimates is the estimated settlements with third-party payers. The estimated settlements with third-party payers, those are basically settlements, receivables and or payables with various payers. The most significant payer that we generally have these types of estimates and accruals is with the government payers, so Medicare, Medicaid, et cetera. And the reason why we have these accruals is a lot of the review and auditing and essentially final settlement of amounts from the federal payers takes a lot of time from the date that you saw a patient to the time that it gets ultimately reviewed and any final settlement adjudicated. So these tend to be out there for a long time. Similar to what we do with our other key estimates, we review and understand management's assumptions, any of those factors that go into it, and we test the assumptions. That's the key, right? We're not just looking at it, we're also testing it. And then ultimately, we're reviewing the presentation within the financial statements to make sure that there's accuracy within the recording and reporting procedures. Moving on to the next slide, just real quick, I want to focus on within capital assets. As David mentioned, there was the adoption of GASB 87, and also I want to highlight there was another adoption that impacted this year was adoption of GASB 96, which is very similar to 87. 87 was revolved around leases. 96 relates to subscription-based services. For the most part, we see this with IT type services, and a lot of times tied in with that is similar to with leases. You have a right of use to some sort of asset or some sort of technology perhaps, And then with it, there's also an obligation over time for the organization. So it's a very similar concept to bringing the leases onto the balance sheet as it is with these subscription-based services. So within that $400 million right-of-use asset and related liability, there's not only leases, but also the subscription-based services, recorded very similarly. Okay. Moving on, want to touch briefly on OPEB liabilities as well as pension liabilities. Um, the basis of a lot of this, a lot of these liabilities, comes from the actuarial valuation of the OPEB and the pension. We have our own Grant Thornton actuaries review what the city actuaries have already done, and they ask questions and get an understanding of the underlying assumptions, and ultimately help us opine on that. And we as an audit team, we test underlying data, so that's really the employee data that goes into these actuarial evaluations. So we test, and our actuaries also review as well. And then I just want to touch on our grant revenues. So as part of our procedures over grant revenues, we obtain listing of the grants and the revenues that are received during the year, and from that we sample the significant programs. Last year, the big significant pieces of grant revenue related to provider relief funds and FEMA. This year, far less within there, but the bigger portions were with T2. And we performed very detailed testing over T2, and with that includes testing of the underlying expenditures, the accounting and reporting for that. And I think in a couple of slides we'll touch on some of the results of that as it relates to where we ended up with the grant revenue testing. Real quick on this page, accounting estimates. I went through all of our key estimates as it relates to receivables, revenues, pension liabilities, et cetera. Financial statement disclosures. We review the financial statements not just for accuracy, but also for completeness. So we have a checklist of all the applicable disclosures that are for this organization, and we ensure that the financial statements are inclusive of those required disclosures. So that's a big step that we take in not only testing again the accuracy of the statements, but also that we're not missing anything that is required. And then, what's that? Yep. So as it relates to subsequent events, we review for subsequent events. That's anything that's occurred after the date of the financial statement. So in this case, anything that's occurred after June 30th, 2023. And under certain circumstances, there might be certain events that occur that might need to be reported within the financial statements. Based on our review and management's review of all the subsequent activity occurring after the date of the financial statements, there were no items that rose to that level that would need to be reported within the financial statements. Yes,
Could you just give an example of what might be something that would be a subsequent event?
Yeah, so something a subsequent event, maybe entering into a significant debt arrangement or a
legal disclosure.
yeah.
It was settled after the balance sheet
right.
date, but before issuance of the financials, that's material. We evaluate it from a qualitative and a quantitative perspective.
Got it.
Management evaluates it, then we review it.
And it doesn't, none of those things would require a restatement of the prior year. It's just to disclose to readers that something has occurred that's going to.
So you would evaluate the circumstances to see did it arise after, or was it around at the balance sheet date that you would have to. You wouldn't restate because you didn't reissue the financials, but does it need to be included in the financial statements, or is it subsequent to year end that maybe it's just disclosure or nothing at all?
Right, and you said you found nothing, right? That's what, right, okay, thank you.
And then just last item I want to touch on here is our related to our fraud. So Tammy mentioned that we have certain procedures, excuse me, within our engagement that we perform as it relates to fraud. We have inquiries of various levels of the executive management team, audit committee, and finance management team, and then we perform procedures within our audit to help us review for anything that might hint towards any level of fraud. One of them that we do is our whole ledger analytics procedures, and that's really a review of the entire population of journal entries. And it's a very, very interesting tool based on artificial intelligence that we spent a lot of time developing and over the years. And it really takes your entire population universe of journal entries that are recorded during the year. It puts them through a a series of, we call them routines, that look for certain aspects that might hint towards potential fraud. So just relationship between journal entries. It looks at if time of entries is available or date of entries, if they fall on holidays and nights and things like that. Things that might just hint towards something to question. And then what happens, it spits out a result, high risk, and we then get the entries and the support for entry, and we review it and audit it to ensure that it's an appropriate entry. And we did not uncover anything based on those procedures. I'd like to now turn it over to Brian and Albert to take us through some of their procedures over the Metro Plus side of the audit.
Thanks, Stephen. Thanks, Tammy. Good morning, everyone. So, as mentioned, I'm Brian Sullivan. I serve on the Metro Plus audit team, supporting Tammy and Stephen's team. I've served on the team as the senior manager since the contract began. I also serve on the HHC ACO and HHC insurance audit engagement. I'll mention too, I serve with Dana Wilson, Todd Farrell, among others, several teammates, and Albert Lee as well, our actuary on the team. And I want to thank Lauren and Lily's team. It was another successful audit process for the Metro Plus audit. I'd like to note no exceptions were noted in our testing for 630. And as mentioned by Stephen, I'll go through 2 slides for Metro Plus real quickly, summarizing the significant risk areas for Metro Plus. And glad to answer any questions in regards to that. You'll see claims payable reserves, so the IBNR. Similar procedures as well for the 1231 audit. Due to the dollar value and management estimation is involved in arriving in the amount and financial reporting. Also due to the fact that an external actuary is engaged as well. So in response to that, we include our own actuaries on our team. They evaluate and assist the audit team. We evaluate the qualifications of Harvey and his team, their competence. Also, we obtain their report. We reviewed that. We reviewed the assumptions and methodologies for reasonableness. And then the audit team, we take responsibility for the underlying data. So we test that for completeness and accuracy. That includes a sample of claims where we trace to source documents. We also perform analytics, which includes medical loss ratio, days claims and IBNR, among those. We also perform a look-back analysis and journal entry testing as well over the GL accounts that are impacted by the IBNR. Also on this slide, we list out the procedures over premium revenue recognition. For that, we select 1 month per quarter for the lines of business, so Medicaid, Medicare, Marketplace as well, and we're able to cash proof the revenue recognized to source documents. We also, similar to IBNR, we perform analytics to address the risk over revenue recognition, building expectations to be able to identify anything unusual in revenue, and as well our journal entry testing is also a response. Next slide. So I'll skip over the explanation of the ledger analytics since Stephen ran us through that, and just note that we ran that also over Metro Plus. So their own listing of journal entries, perform a test of completeness to ensure we're performing it over complete population. And I believe it was 15 entries that were selected for testing, and again, no exceptions were noted there, no concerns over fraud. That's it for Metro Plus, so I'm glad to pause there and answer any questions.
Any questions? Microphone team? Okay. So the next slide, as we discussed in our planning process, we have a technology support team that focuses specifically on healthcare. And they look at your two significant systems that are relevant for financial statement reporting process. That is PeopleSoft for your GL and Epic for your patient accounting. And they test a variety of controls. They assess the IT risks. They identify the controls and test the technology-related controls of these financially significant or dependent systems. And happy to note that they have found no exceptions in the current year. Okay, these next slides are the required communications, some of which I've already addressed, and I'll just focus on the key items. So the first one is our engagement letter, which you've been provided a copy. And then, as I mentioned, we plan to prepare and issue an unmodified opinion on the financial statements, and management will sign a representation letter on the day that we issue those financial statements. No alternative accounting treatment noted. We already discussed in both at great length during our planning meeting as well as today in terms of the implementation that management has adopted GASB 87 and 96 and did not restate prior year amounts as they were not material to the financial statements. The next slide lists the benchmarks for materiality, which helps determine certain sample sizes and populations that are within scope to determine our audit scope as part of the audit process. And the use of work of others. We use the Grant Thornton, as we mentioned a couple times today, the valuation service throughout various parts of the audit process.
Tammy, could I ask a question on
Yes.
the materiality?
Sure.
Just reading your auditor's comments,
Mhm.
you said that total revenues and surplus are the relevant benchmark, so financial statement is greater than materiality? I'm not sure.
Yeah, so what we do is we use certain percentages of revenue to determine our materiality. So there's a couple different formulas that you can use for organizations, but you need to use a benchmark that's relevant. So for some, like that, for example, non-for-profit organizations, total assets might be a better benchmark. For this organization, it's revenue.
Revenues and surplus, right?
Exactly.
But you weren't specifying the percentage. And
Oh, yeah.
I
So
thought
there's
you meant that any.
Oh, no. So there's a percentage that we determine, and from there, there's like what we call a haircut. So
Right.
there's the percentage to see which population or which line items within the financial statements we test. And then there's a variety of different thresholds of, if we find an exception greater than a certain dollar amount, which is a haircut from that threshold, then we would report that to the committee.
So like magnitude, if the total revenues are 13 billion.
Yeah, so if you have like 3% or something of, total revenues to determine which lines to test, and then from there, which ones require adjustments, because, we might find an adjustment of $10 million. That's not relevant, from a total population to these large financial statements.
Perfect, thank you.
Okay. So this next slide, I think the important thing here is a significant deficiency in internal control. So as we have discussed at great length in the past, there's certain levels of control deficiencies that can occur within an organization. So the lowest level, the least significant is a control deficiency. Then you have that middle, which is significant deficiency, and then material weakness, which is the highest level. We are required as auditors to report the significant deficiencies and any material weaknesses to the committee. As you might recall in the past, we've had a variety of level of control deficiencies. Last year was a significant a material weakness in the areas of grants. And that related specifically to the recording of grant revenue and the related expenditures and the documentation and throughout the year as it relates to the communication between the grants department and the financial department. Happy to report this year we do not have a material weakness, but we do have a significant deficiency, and that relates to a couple of different factors, mainly specifically relating to the T2 grants funding. As you heard, I guess through David's presentation and through when Steve spoke, there was not a lot of material FEMA and PRF funding recognized in the financial statements this year. So the past couple of years coming out of COVID, there was, a lot of FEMA and PRF funding recognized in the financial statements. So this year, not a lot of testing had to be done over that group or that type of grants. However, there was T2 funding, and we did test that, and we did note that there were adjustments in the current year related to prior year, and that was a result of process and controls in place and how the T2 funding was recorded. Management, or I should say the grants management team, and I'm using that word very loosely, that group, the T2 grants in the past were recorded based on estimates versus true amounts, and that's what led to an adjustment in this year's financial statements. Another area of grants that we focused on, because anytime when you have a material weakness in the subsequent year, you're going to really focus on that area of grants, for both from a qualitative and a quantitative perspective. And one other thing that we did note is the reconciliation of the statement of expenditure and federal awards to the financial statement. So the statement of expenditure and federal awards, otherwise known as the CFA, for those who aren't familiar, it relates to your uniform guidance audit. So anytime when an organization receives over $750,000 of funding, so pretty low threshold for this organization, you have to prepare what's called a statement of expenditure and federal awards, and a uniform guidance audit has to be prepared. That is done at the city level. So our team does not do that. That is connection with the city. It's due 9 months after year end. So the city team will work on that. But the information from health and hospital grants feeds up to that. And best practices is that before issuing the financial statements for health and hospitals, that draft schedule should be prepared and a reconciliation should be performed. And we're recommending that going forward. So those are the two factors, or the two key factors that are leading to the significant deficiency this year. So not a material weakness, but a significant deficiency. So any questions? Hopefully that was
Do you characterize, so the material weakness is resolved, and this is a new
So this is in the
deficiency,
same
or is it
area.
like a downgrade of the material
So
weakness?
that's how I would view it. It's a downgrade of the material weakness. So the good news is that, you know, you're making progress. Again, we didn't have the PRF and FEMA funding to test this year because there was not a material amount recorded in the financial statements. But we focused on that area of grants, which we continue to focus on, and we've had comments over the past several years. So what we found within grants this year doesn't rise to the level of a material weakness, especially from a quantitative perspective. Last year the numbers were a lot larger, but from a qualitative perspective, and you know, some of the quantitative adjustments that were noted led to an area of significant deficiency, which warrants the attention of the committee.
So I mean, we talked about this last year, that the grants area, we've had a series of different findings over the years. Last year, as you noted, was a large amount of money we were talking about, and so it rose to material weakness, but that there seems to be good progress that we've been hearing about from the team as to working to resolve that and focusing on it, and these are some further findings and recommendations
Exactly.
from this year.
Exactly.
If I could characterize it.
Yep,
Okay.
perfect.
And tell me if I understand it, what the weakness is on, the problem is on the basis of making adjustments that make things correct, right? It's the idea that it wasn't correct in the first statement, but just the simple fact of correcting it is what creates the finding. Is that a fair?
Yeah, I mean, anytime you have an adjustment, you go back and say what was the root cause of the adjustment. And the adjustment was because revenue was booked based on a budgeted amount versus actual expenditures. So that had to be corrected in this fiscal year for something that occurred in last fiscal year. Not material enough in nature to restate, reclassify, but the adjustment was made in this year's financial statements that relate to prior year numbers. If the accounting was done correctly on the basis of actual numbers, then you wouldn't have the adjustment this year. So
it's highlighting a process of recognizing revenue as opposed to any
right.
allocation
That
or
is one
usage.
area where hopefully my team is resolving now with our detailed testing, but we haven't to date, as of before this meeting, found any issues with the underlying supporting documentation.
Great.
So, can I?
Yes.
So the issue there is with the process, not with the amount.
Well, the
More than anything
process
else.
led to the amount.
Yeah.
There was an adjustment recorded because the process wasn't complete and accurate.
But not to an inappropriate, except like
Right.
charging.
It was a tolerable amount, you know, but the process needs to be corrected because you should not have any adjustments.
Thanks.
Okay. I think we've talked through everything else, and I know that time is limited here, so these are just the last couple slides are just on our diversity, equity, inclusion. I think it is important. I'm not gonna go through them in detail. We have a lot of, different aspects to our firm at Grant Thornton of our commitment to diversity. I know it's extremely important here at Health and Hospitals with our business resource groups and the various inclusion of diversity and equity initiatives. So feel free to read through them. We also issue a report. And that's our progress on our 2025 DE&I goals. Happy to share it with the committee if you're interested. I think it's really important, and I know that it's important to you as an organization as well. So with that, I will pause for any other questions that the committee may have.
Diversity, equity, and inclusion activities are very impressive.
Yeah. I will tell you, I personally lead two of the what we call business resource groups, BRGs, and it's really impressive what we're doing as a firm. And I speak with other firms and other organizations, and we have speakers, and I could spend hours. Very passionate about it, and I'm happy to share the report with you because I think it's really interesting to share. We're not there yet, but we're making progress.
Okay. I would like to propose a motion to accept the financial statements as presented.
Second.
Jose,
Yes.
Dr. Katz?
Yes.
Frida?
Yes.
Okay.
Thank
Now-
you.
Now we will have an audit update from Mr. O'Keefe.
Madam Chair, I'm just thinking, should we think about time for a second?
Yeah, I
Because
was-
we're already past this, and I'm not
Right.
sure whether we can accept written reports in these areas, or I think that might be a good idea given the time. This was, obviously, reviewing with our auditors had to be the top priority
Right,
of
right.
this meeting. That's a requirement. Could we, just looking at Joe and Catherine, could we do your reports as written reports in this meeting? Joe, that's okay?
We write up a report, a narrative, or
Uh,
just use this as the report?
Correct.
And if anybody has any questions, let
Yeah.
us know.
Okay.
So there'll be written submissions into the record.
Okay.
Okay, and that will allow us to get back onto time.
Okay. Is there any old business to come before the committee? Any new business? There being no further discussion, the meeting's adjourned.